Good day everyone! Now, we will be giving you a tutorial video about one of the topics of financial accounting and reporting, cash and cash equivalents. We will be using the textbook of Financial Accounting Volume 1 by Valex Peralta. Valex. So now, let us define cash. Cash means money in layman's term. Money is the standard medium of exchange in business transactions. However, in financial accounting, cash does not just include money. It also includes any other negotiable instruments that is payable in money and acceptable by bank for deposit and immediate credit. Tandaan natin yung term na immediate credit, okay? And few examples of this cash equivalents are checks, bank drafts, and money orders. Since in order for a negotiable instrument to be qualified as cash, it should be available for immediate credit, which means that post-dated checks are not considered as cash. They will only be considered as cash kapag narating na niya yung date na nasa check. And in order for a cash to be reported as cash, it should be unrestricted in use. For example, you have a savings account or an account to a bank and that account is restricted for use, which means na hindi mo siya pwedeng i-withdraw. Then, the money in that account are not reported as cash because they are restricted in use. And the following cash items are included in cash: cash in hand, cash in bank, and cash fund. Now, let us go on to cash equivalents. The Philippine Accounting Standards 7, paragraph 6, defines cash equivalents as short-term and highly liquid investments that are readily convertible into cash and so near their maturity that they present insignificant risk of changes in value because of changes in interest rates. And highly liquid investments that are acquired 3 months before maturity can qualify as cash equivalents. Equity securities cannot qualify as cash equivalents because they have no maturity date. And one thing to remember is that redeemable preference shares are not equity securities. How? Because these redeemable preference shares are not yet considered as equity securities because they are not yet redeemed as preference shares. And these redeemable preference shares, merong maturity date yung mga yan. And when these redeemable preference shares have reached their maturity date, the holder has the option to redeem the preference shares. Gawin yung yung investment niya sa isang company to a preference shares. And if they have already redeemed those preference shares, then magiging equity securities na yon. And those are not reported as cash equivalents. Note, what is important is the date of purchase, which should be 3 months or less before maturity. You will disregard the issuance date of that security. What you will consider is the date of purchase, which means na kailangan 3 months from the date na binili mo siya, kailangan magmamature na siya. So we have an example here. The following are the short-term investments held by X company. We will classify this kung cash equivalent sila or not. Okay. 5-year 12% bonds dated January 1, 2010, acquired on December 1, 2014. Technically speaking, bonds are long-term investments. However, when you acquire these bonds, 3 months na lang yung life niya. I mean, less than 3 months na lang yung life niya. Binili mo siya December 1, 2014 and this bond will mature on January 1, 2015, which means 1 month na lang siya yung buhay niya nung binili mo siya. Though technically speaking that a bond is a long-term investment, this one is already considered as a short-term investment, and sa sobrang ikli pa niya, you will also report it as a cash equivalent. Okay? 3-month treasury bill, nandun na, 3 month, and it is a treasury bill, so that is considered as cash equivalent. Redeemable preference shares acquired on November 1, 2014 and maturing on January 1, 2015. Redeemable preference shares, they are not equity securities, so they can be qualified as cash equivalent. So titignan mo lang if it is 3 months, November 1, 2014, 1 month, December 1, 2014 and January 1, 2015. So 2 months yung maturity niya, that is classified as a cash equivalence. And this commercial paper acquired on December 1, 2014 and maturing on May 1, 2015. How many months is that? January, February, March, April, May, 5 months. So that is not qualified as cash equivalents. So the total cash equivalents is 170,000 pesos. And these are the other notes to take off in cash and cash equivalents. Cash is measured at face value. You will measure it at face value if you have the cash in yung local currency, or I mean yung currency kung saan nag-operate yung business. If a company has a foreign currency, it should be translated into the current exchange rate, not on the average exchange rate, but on the current exchange rate. And if you have a cash in foreign bank, then restricted siya. Of course, it should not be classified as cash. Diba? Yung definition natin kanina, in order for a cash to be reported as cash, it should be unrestricted in use. And cash and cash equivalent should be shown as the first item among the current assets. The current assets are liquid investments. Kaya yun yung parang nagiging reason why they are reported as parang doon sa pinakataas ng balance sheet. And within that current asset, yung cash and cash equivalents are the most liquid investment or most liquid asset of a firm or a company. So, siya yung unang report under current assets and in the balance sheet as whole. And the details of the line item of cash and cash equivalents should be disclosed in the notes to financial statements. And in financial management, any cash in excess of what is needed should be invested temporarily in some type of revenue earning investment. What is the meaning of that? For example, Company X, yung parang kailangan niyang cash in its day-to-day operations, kailangan mag-maintain siya ng 1 million cash para masustain niya yung mga operations niya everyday. However, meron siyang 5 million cash, which means na meron siyang excess na 4 million cash. Kailangan yung 4 million na yon, hindi niya lang yun ikikip as cash. Kailangan i-invest niya yon into a revenue earning investment. That is in accordance to financial management. Kasi, hindi mo naman kailangan yung 4 million na cash na yun kasi 1 million lang sapat na. 'Di ba? So, anong gagawin mo dun sa 4 million? I-invest mo siya para magkaroon ka ng mga other income. And if yung mga revenue earning activities na yon, if they are acquired and yung maturity nila is already 3 months or less, of course, that is a cash equivalence. Ngayon, if it is less than 1 year but more than 3 months, hindi yun cash equivalent, but they are current assets and reported as other current investments. And of course, if it is more than 1 year yung maturity niya, long-term investment na yon, and it will be reported as non-current asset. Again, we reiterate it na what is important is the date of purchase and not the issuance date. So let us now go on to cash fund. So if yung cash fund is set aside for day-to-day or current operations of the business, it is reported as cash and cash equivalent. So ano yung mga yon? For example, petty cash fund, payroll fund, dividend fund, tax fund. Ito yung mga fund na mostly nagagalaw yan within the current operations or within 1 year. 'Di ba? O for example, petty cash fund, usually ginagamit yan lagi sa mga expenses na ng mga company. Payroll fund, kapag nagpapasweldo yung company. Dividend fund, kapag magde-declare siya ng dividends. Tax fund, pambayad ng mga taxes. Yan, yung mga yan, usually nag-occur yan lagi within the current period. So, kaya nga, itong mga cash fund na to, they are reported as part of cash and cash equivalent. Now, if you have a cash fund that is set aside for non-current operations or for payment of non-current liabilities, long-term investments yung mga yun. For example, sinking fund, preference share redemption fund, contingent fund, insurance fund. Ito mga fund na to, minsan lang na mag-occur sila sa current day-to-day operations ng business. Usually, kinikip mo tong mga funds na to para i-secure yung long-term goals ng company or yung mga long-term liabilities ng company. And since hindi naman sila magagalaw within the current period, they're reported as non-current investment and not part of cash and cash equivalents. And remember the matching principle. If a cash is set aside for a current operation, that is reported as current asset. If a cash is set aside for a non-current operation or payment of non-current liability, then it is a non-current asset. So let us now go on to bank overdraft. What is bank overdraft? That is when the cash in bank account has a credit balance. Diba ang cash is a asset and yung normal balance niya is debit. However, if a cash in bank has a credit balance, negative balance, yun yung tinatawag na bank overdraft. And these bank overdraft are reported as current liability. It should not be offset against other bank accounts with debit balances. Hindi mo siya pwedeng i-minus dun sa mga may debit balances kasi i-report mo siya separately as current liability. However, there is an exemption to the rule. An overdraft can be offset against the other bank with a debit balance if the said accounts are maintained on the same bank. So we have an example here para mas maintindihan natin. X company maintains the following bank accounts. BDO account number 12345, 150,000 debit. BDO account number 12346, credit balance na 100,000. These two, pwede mo yan i-report as cash in bank na parehas. So ang lilitaw na cash in bank mo sa BDO is 50,000 na lang kasi pwede mo siyang i-offset because they are maintained on the same bank. Okay? And this one, PNB account number 1234. Of course, it is a debit balance. Automatically, ilalagay natin yan. However, we have here a overdraft from BPI account number, let's say, di natin nalagyan, 123 naman. So, di ba? Itong 40,000 na to, hindi natin siya pwedeng i-less sa cash and bank. So, i-report mo niyan itong 40,000 na to as current liability. This 100,000 na bank overdraft kay BDO, hindi mo siya i-report as current liability kasi i-offset mo siya dun sa may debit balance na isang BDO account. However, this BPI account, since wala naman ibang BPI account ka na hinahawakan na may debit balance, hindi mo siya pwedeng i-offset and it will be reported as current liability. So, your total cash is 150,000. Compensating balance. What is compensating balance? It is the minimum deposit account balance that must be maintained. Minimum balance, minimum deposit account. So, meron tayong mga classification for a compensating balance. If the compensating balance is legally restricted because of formal compensating balance, automatically, hindi mo na yan i-report as cash. Ano mo siya i-report? Depende. If the related loan dun sa compensating balance is current, then it is current asset. If the related loan is non-current, therefore, non-current asset. Diba matching principle? If a cash fund is set aside for a payment of a current liability, then it should be matched it as a current asset. Otherwise, if it is non-current liability, then it is a non-current asset. Now, if a compensating balance is not legally restricted because of informal compensating balance agreement, automatically reported as cash, whether or not current or non-current yung related loan. Cash mismanagement. These are some tools na hindi nagiging fair yung presentation mo ng line item mo ng cash sa financial statements. One of the example, I have here 3 is one of the magbibigay ako ng 3 example. My first example is window dressing. Window dressing does not just particularly denotes to cash. It can affect all accounts of the financial statements. Kasi when there is a window dressing, what happens is that your books are opened beyond the close of accounting period. For example, yung close ng your accounting period is up until December 31 only, and you kept your books until January 3 of the next accounting period. Then, it appears then that your financial statements then are window dressed. Ibig sabihin, they are opened beyond the close of the accounting period. The next is lapping, consists of misappropriating a collection from one customer and concealing this defalcation by applying a subsequent collection made from another customer. Let's say meron tayong apat na customer, A, B, C, and D. Paano ginagawa yung tool na to? If nagbayad si A, let's say 10,000, 10,000 lahat yung accounts receivable mo sa apat na customers na yon. Nagbayad si A sa'yo ng 10,000. Tapos, kinuha nyo yung 10,000. Paano nyo i-conceal yung 10,000 na yon? Kapag nagbayad si B, ilalagay mo nun yung payment ni B as payment ni A. Tapos, anong mangyayari nun doon sa naging payment ni B? Kapag nagbayad na si C, i-conceal mo nun as payment ni B. Kapag nagbayad si D, i-conceal mo as payment ni C, and so on and so forth. So, kaya nga, continuous process yung lapping. And kiting occurs when a check is drawn against the first bank and depositing the same check in a second bank to cover the shortage in the latter bank. No entry is made for both the drawing and deposit of check. Let's say, for example, meron kang dalawang bank accounts, BDO and BPI. Kasi kapag pwede ka naman kasi maglipat ng cash kay BDO to BPI. And kapag maglilipat ka ng cash into a different banks or magta-transfer of cash ka, kailangan meron kang gagawin na journal entry para mag-reflect yung flow ng cash mo sa libro mo. However, kapag let's say merong kulang sa cash, pwede kasi nilang i-conceal yun using kiting. How is that? We have an example here. Ex-company accountant stole 5,000 and wants to conceal it by kiting. Ex-company has two outstanding bank accounts from BPO and BPI. On December 31, ex-company accountant drawn a 5,000 from BDO and deposited it to BPI. The check was cleared on January 2 of the next year. Anong mangyayari dito? Kasi usually kailangan, ang gagawin ni accountant dito, kapag nag-transfer siya ng 5,000 pesos dun sa BPI account from BPO, ang gagawin niya, magde-debit siya ng cash in bank, BPI, 5,000, credit cash in bank, BDO, 5,000. Pero hindi niya journal entry yun para magmuka na hindi siya nag-stole ng 5,000 pesos na cash. How? Dahil nung December 31, nung dineposit na niya yung check-in na yon kay BPI, assuming na hindi holiday kay Philippines, ang gagawin ni BPI nun, ika-credit na niya yung 5,000 na yon. And si BDO, hindi niya i-debit yung 5,000 na yon. Kailan niya i-debit yun? Pagdating ng January 2. 'Di ba? Nung December 31, nagkaroon ka ng additional 5,000 na cash. Technically, transfer of cash lang yon kay BDO. Pero since si BDO, clear pa lang niya yung check noong January 2, i-reflect pa lang niya sa bank statement na sa January 2, doon pa lang nabawasan yung 5,000 na ginawa ni check nung accountant. So, ang anong nangyari dito? Na-conceal yung 5,000 na shortage at the end of the accounting period. Cash shortage and overage. The title speaks for itself. Kulang or sobra. If there's a cash shortage, the cash balance per book is greater than the cash count. And if it is otherwise, then it is overage. Cash count is greater than cash balance per book. So this is the accounting for cash shortage and overage. So kapag natuklasan mo na merong shortage or overage, kailangan, if shortage, you need to credit cash, 'di ba? And if it is overage, you need to debit cash with the corresponding amount of shortage and overage. And then, magsiset up ka ng temporary account, which is the cash short or over. Ngayon, itong cash short or over na to, maalis yan, kasi temporary lang. And, ma-replace yan with a real account. How? After investigation. So, kapag, let's say, after investigation, natuklasan mo na kaya nagsobra or nagkulang yung pera ay kasalanan ng cashier, custodian. If it is kulang, magiging receivable nun siya kay cashier. So, magde-debit ka ng receivable which is due from cashier And next, credit mo yung cash short or over. So, mawawala na yung cash short or over. Napalitan siya ng due from cashier. Ngayon, if this overage, let's say, after investigation, natuklasan nyo na nalagay pala ni cashier yung pera niya dun sa kaha. So, magkakaroon ka ngayon ng payable kay cashier. Mawawala yung credit na cash short or over by debiting it and crediting payable to cashier with the corresponding amount. And if you after investigation, natuklasan nyo na wala naman palang kasalanan si cashier custodian, then, i-recognize mo yung if it is overage, meron kang loss, and if it is meron kang shortage, meron kang loss, if it is overage, meron kang miscellaneous income. Yan. So, let us now go on to petty cash fund. One of the internal control in the business is impress system, which means that when you have a cash receipts, they should be deposited intact. And if you are making cash disbursements, they should be made by means of check. However, nag-establish tayo ng petty cash fund. How? Because sometimes, meron tayong mga small expenses that cannot be paid conveniently by means of check. For example, meron kang 500 na transportation expense. I-check mo pa ba yun? Hindi na. Ibibigay mo na siya as cash. Kukunin mo yung 500 na yon sa petty cash fund. And there are two methods to account for the petty cash fund. One is impressed, second is fluctuating. So these are the difference sa pag-journal entry kay impress and fluctuating. Ito kasi yung mga the following are the events regarding petty cash fund. So una is the establishment. Ito yung maglalagay ka or mag-establish ka ng petty cash fund. Parehas na merong entries si impress and fluctuating and their entries are the same. The payment of expenses, ito na yung mag-i-incur tayo ng expenses and we will be using the petty cash fund sa pagbabayad ng expenses na yon. If gumagamit ka ng impress, wala kang gagawing entry. Anong gagawin mo? Wala kang formal entry sa books mo. Ang gagawin mo, maglalagay ka ng memorandum entry sa petty cash fund journal. However, kay fluctuating, kapag nagbayad ka ng expenses, i-journal entry mo na yan. And of course, syempre, sa kakagamit mo ng petty cash fund, mauubos yung pera niya. And if you will make, or if lalagyan mo ulit ng pera sa petty cash fund, yun yung tinatawag na replenishment. Pareha silang merong formal entry sa books if you're using impress and fluctuating, pero different yung journal entry nila. And at the year end, if you are using an impress fund system in accounting for petty cash fund, kailangan mong i-adjust yung balance ng petty cash fund. For fluctuating, no adjustments, wala kang entry. And of course, dahil nag-adjusting entry ka, necessary na mag-reversing entry ka rin at the start of the accounting year kay impress. And since kay fluctuating wala namang entry, there's no need to make for reversing entry. So these are the example of the transactions of a petty cash fund. So on November 10, the entity established a petty cash fund of 20,000. Same lang entry nila, debit petty cash fund 20,000, credit cash in bank 20,000. Noong November 15, nag-incur ng transportation and meal expenses of 7,500 and 9,000 respectively. So kay impressed, walang entry. Maglalagay ka lang na memorandum entry sa PCF journal. Kay fluctuating, i-recognize mo na yung expenses and the corresponding debit to expenses will have a credit to petty cash fund. Okay, debit transportation expense, 7,500, meal expense, 9,000, and credit na total, petty cash fund na 16,500. Ngayon, dahil 3,500 na lang yung natitirang fund sa petty cash fund, nakita na yung necessity to replenish the petty cash fund. So, yung entry kay impress is, dun mo i-recognize yung mga corresponding expenses. Debit transportation expense 7,500, debit meal expense 9,000. Dahil hindi ka naman nag-credit ng petty cash fund nung na-incur mo yung expenses, hindi necessary na mag-credit ka ng petty cash fund. Dahil saan ba nanggaling yung pang-replenish mo ng petty cash fund? Sa cash in bank. So mag-credit ka ng cash in bank na 16,500. However, for fluctuating, dahil binawasan mo si petty cash fund by making a credit to petty cash fund nung payment of expenses, kailangan mong ibalik sa 20,000 yung balance ng petty cash fund by debiting petty cash fund of 16,500 and credit cash in bank na 16,500. And then next, noong December 16, na-incur mo ulit yung transportation and meal expenses of 7,500 and 9,000 respectively. Kamukha nung kanina, memorandum entry lang kay PCF Journal. Okay, and then you will make the same entry again to the fluctuating by debiting expenses and crediting the petty cash fund. And then sa December 31, at the end, let's say, yun yung end ng accounting period, kailangan mong mag-adjust kay impress fund system. Anong gagawin mong entry? Kamukha nung ginagawang entry kay fluctuating. Ide-debit mo yung mga unreplenished expenses as of the year end para ma-reflect mo yung correct balance ng petty cash fund. Diba? Bakit siya tinawag na fluctuating? Kasi kung papansinin mo, at the whole year, paiba-iba yung balance ni petty cash fund. Kumagalaw siya from 20,000, tas naging 3,500, tas naging 20,000 ulit, tas naging 3,500. Fluctuating yung balance niya. Kaya impressed, isang beses lang napapalitan yung balance ni petty cash fund. Yun yung at the end of the year kapag kailangan mong i-adjust yung unreplenished expenses. And of course, para maibalik sa 20,000 yung balance ng petty cash fund, kailangan mo siyang i-reverse at the beginning of the year. So that is the end of the discussion for cash and cash equivalents. Don't forget to like and subscribe the Accounting Tutorial Philippines for more tutorial videos, and together we reach our goal to become a certified public accountant. Thank you so much, and God bless us all.